Okay, quick video today, back after a few days off. It's the midterm break here in Ireland, so I was away with the family, but took a trade in London today, and I kind of had a bit of a think over the few days off. You can kind of get caught up in the weeds with trading. You tend to. I think it's just our nature. You tend to drift down into the lower time frames, and because it kind of gives you the most the quickest confirmations, whether they are confirmations or not, but it's the quickest move in price, so you're waiting for that kind of quick and rapid movements in the market for confirmations, whereas if you can sit on the higher time frames and just wait, that's where the gold is. And that's always been my mantra: use higher time frames 90% of the time, and then lower time frames purely for execution. So I kind of took that approach again coming into London, and again my two main concepts are liquidity and imbalances. And for entry, I have to keep reminding myself that liquidity is key. Imbalances are more confluences, but I need sweeps of liquidity. That is really the key to it. So I kind of just looked straight onto the 15-minute today, and I don't know why. I've just kind of focused on unmitigated 15-minute imbalances. So this is what we have over here, and liquidity. I did a bit of back testing on my time off, and I just found a lot of, it's quite consistent. So let's just go back to the start of London here, and I'll bring it up to 9 o'clock. So here we go. So London's kind of pushing up after taking Asia high, and it looks like we had yesterday's New York high here. Let me zoom in a bit. So that got taken, but to pair liquidity with an imbalance, we have these unmitigated 15-minute imbalances up here, and that's just something in New York as well that I've noticed. I might do a little quick replay of New York from a previous day. I wasn't trading it, but when you go back and look at it, it makes a lot of sense. But so this is price moving up. We've swept New York high. We've got this imbalance. So if you just wait for both of them to be hit, and then look for an entry model. So now we've swept previous day New York, and we've tapped into these unmitigated 15-minute fair value gaps. And then what have we done as well? We've built up all this low resting liquidity that can get ran through. So what I'm looking for is a strong bearish signal on the 1 minute, ideally a 1 minute inversion. So close below a 1 minute bullish gap. And this is another great signal in price, is that the 1 minute came down. It respected this 1 minute bullish gap, so we haven't broke it yet. Let me just highlight it, and I'll put it in grey. Okay, but look what we've done here. We've re-swept kind of inside liquidity. So we've swept this main liquidity. We're inside this 15-minute bearish gap, and we've had a sweep on the 1 minute. Okay, and then we have this strong push down, and then this. So now we've closed below it. We've kind of we've kind of violated this bearish imbalance, but we've pushed into this bearish order block, if you want to call it that. But we've shown a strong intent, and we've closed below this 1 minute imbalance. So that was my entry. Here, stop above the high, and then targeting 1-to-1. It was a very pain-free trade. Now, again, 1-to-1 base hit, just first day back after a few days off, just trying to flex the muscle again and get used to things. But this is all going to get ran. I kind of knew it. I took a very small position on this. I didn't have anything to kind of scale out of, but you can see what happened after the fact. But this just shows this just shows the power of just waiting for clear setups. So That's it. You only need that. That's a 4-hour trade down to these equal, kind of relative equal lows. You could have zoomed out and potentially targeted kind of lows down here. So anyway, that's all to do with kind of your risk tolerance and what you're after. But it's more, this is, first of all, liquidity sweep on the higher time frame, imbalance on the higher time frame, which we've tapped into, and then the entry model. So very quickly, we're at 5 minutes, but I just want to take all that off the chart, go back up to the 15 minute, and I just want to show you, as an example, say for example New York here. Now we mightn't get, I think I was looking at this, we mightn't get the lower time frame model. Like, you can't see 30 seconds on this. Sometimes I use the 30 seconds on Tradevate. Oh yeah, and just to show you that was that trade in London that I took on my my accounts, and that was the bullish. You see, I had taken a silly short here too early, low risk, and then I kind of just made it back on this trade. So it was kind of break even for London, and this was kind of my lesson, and my thoughts afterwards was that I didn't wait for the 15 minute to get the 15 minute imbalance to get tapped. I tried to take this early inversion where once we had swept liquidity, but in future I want both, and this was obviously the key. But in New York as well, here, this is going back to Wednesday. So open of New York, we have liquidity here. Okay, and what have we got resting below it? Again, 15 minute unmitigated imbalances. So if I could enter the 1 minute, all you have to do is wait. If I keep mapping these out before sessions, okay, now we tap into that there. We sweep and we tap. So we've met both criteria. Now I don't have 30 seconds on this, but I believe there was a 30-second inversion. But again, even if you don't have that, you're looking for a strong intent, or and there you go. That's a strong 1 minute bullish move. You don't even you can kind of guess that on lower time frames than on the seconds, which I don't tend to use often. There's some type of inversion there, but that's a strong move. And then again, you can target 1-to-1, target the highs up here, this high over here to the left, or even higher. Go and try and take the London high. So I just play that forward. Yeah, so simple. I think kind of had a bit of a eureka moment again, but I keep having these, and then you kind of lose focus. You go down to the lower time frames, especially when New York opens. There's a lot of action, and you want to get in on it. But if you kind of stand on the sidelines and wait for perfect setups based on the higher time frame, based on higher time frame liquidity getting swept and imbalances being tapped into. So that's my rant over. Catch you in New York, maybe.